Hello, in this video, I will talk about specifically the ITR Form 2 for individuals and the HEF not having income from profits and gains of business or profession. So what it means, say if you are an employee working for an employer, you get a salary, or if you are any other income from either agriculture or you are doing your rental housing, but also you are having a capital gains of any sorts. Either you invest in market or either you are buying and selling houses. If you have a capital gains profit, you have to use ITR2. Also, all the NRIs, non-resident Indians, they have to use the form ITR2. Again, it depends on the assessment year. So if your the year is 29, make sure that you are selecting the right year to download the form. You can go into income tax filing. Okay, then go into downloads. In the download section, you can able to download all the either Microsoft Excel utility or a Java utility. Say in this ITR2, if you are an NRI or if you are somebody who was working for an employer, you get a monthly salary, but also you are investing in the stock market. Either that or you are buying and selling houses or land where you have a capital gains. So you need to download the ITR2. Let's assume that you have your ITR2. So I'm downloading it, have this form. So it will be a zip file. You can download any zip utility to unzip the folder and extract all the files. So this is the file for ITR2. This is the general page. This you can see the tab 1. If you go to this tab, so whatever it's not applicable to you, you can keep on going and make sure that you don't get this select yes or no. Whatever is applicable to you, leave it in. Say if I'm like I told you, I'm going to talk about capital gains in this one, the schedule specifically. So let's leave it yes and yes. House property, let's leave it for now yes and yes. Okay. Then what do you got? If you're 112A, that's where the long-term capital gains tax you need to fill it in. Let's go into tab one by one. For now, let's take out the things that we are not going to fill it in. Let's say details of donation. Say if it doesn't applicable to you, just say no. Again, the ITR2 is not for business people who have a company and they get the profits and gains from doing a business. It's not applicable to you. Hit the apply button, so it will remove all the tabs that's not needed for you. Part A is the general information. You fill your name, last name, PAN, all the information file, and select whatever is applicable to you. Since we are filing before the due date, hit 139 class 1 or before the due date. So whatever is, if Portuguese is not applicable, go and hit no. Like I told you, since I'm going to talk about the capital gains, there's a lot we need to cover. So let's keep moving. So if again the top one is for the house. If you have any capital gains coming out of buying and selling land or houses or apartments, you have to fill it in. Since I'm not talking about stock in this one, so public stock units, let's go and start doing it. You can depend upon the brokerage. You can go into download all the reports that you have. So based on the reports, you can fill it in. Say for now, let's give it a value of say. Now here you need to put in a cost of acquisition without indexation. So what is indexation? Indexation benefit is the government, each government will give you the benefit of the cost of inflation. How long the money is tied up for a couple of years, so they based on the inflation, the value of money will go down. So that they're giving you indexation benefit. Again, the expenditure, it's depend on say your obviously you have to give STT to transfer to buy or sell stocks. So again, you cannot claim the STT on your capital gains, but you can fill it in over here. So it will the total will give you from that the full value of consideration minus all this each items that you are item 1, 2, and 3. So this total will give you add all those things, cost of buying those shares and any Yeah, say if it's a house or something or land or something, you're doing any improvement on it, do any maintenance on it for upkeeping, that will add into that. For stocks, you don't have no nothing for improvement, right? So expenditure again is STT, you can put it in, but it's not, you're not gonna get it for out of the capital gains tax. So here is the one where you need to fill in, or based on all the brokerage reports, they will have a detailed view of all these units. This is where you need to fill in for the long-term capital gains. Say if you have in 2019-20 you bought Reliance, so you to find out the ISIN code. Some brokers give it, some doesn't. So you go into and go to Google and say if you have you bought a Reliance in 2018, so get ISIN code. You can go into NSE website. It will get it. The first, obviously, the first page comes in as a NSE. So go into NSE website. So this right here is the ISIN code. Obviously, you cannot copy paste it. There's no Control C, Control V allowed in that Excel utility. So you need to type it in. So this going to be INE2. Come back to your Excel utility. Start typing it in. INE002A 01018. So the utility will put it in for you once you type the ISIN code. Now you say you bought 20 units. Say you bought it for you sold it for 2,000. Now it will the utility, obviously all the green cells is the one that you need to fill in the information. All the red cells are mandatory. Again, these all the tabs that they have formula in it, those are all hidden and locked. Make sure you enable options. Cost of acquisition. So that's where you need to fill it in. Say you bought it for 1,000. So fair market value (FMC) is the FMC column. Fair market value will be given by each brokerage. Those are when the new capital gains tax come in. The LTCG, long term capital gains tax, is at 10%, and short term capital gains is at 15%. So that's where FMC will come in. You need to put it in. So it's most of the time it's either based on again you get it from the brokerage. Let's say for now, let's say it's 10. I think it's in 2018, the beginning, it was only trading at like. So right here, that's your long-term capital gains, $21,000. So that's applicable at 10% interest rate. Again, if it's a short term, it's 15%. One important thing I need to mention that a lot of people, what they do is this column right here, this row is very important. It's called the bonus stripping or a dividend stripping law. So what it is like a lot of people, what they do is they keep on watching the stocks when they will come up with the dividend date. So they watch for the record date. Once they know the record date, they will try to buy the share before that so they can get the dividend. In theory at least, the stock, whatever is trading, say if the dividend given by the share is 5% dividend. So in theory, what it is like the day before, it's the stock is trading at $100 rupees, and if it's a 5% dividend, so after the dividend, the share will fall back to 95. That's in theory. So what people do is they buy the shares, they get the dividend, but then once the share falls back, they will sell the share and they will claim it. They take or they do the carryover loss to the next year. So or the same thing like they know when is the bonus shares are available. They keep watching the dates by the management, come up with the date, record date. So they'll buy the shares before that, and once they get the bonus units, they will sell it for a loss. Obviously, when the shares split, the value, the total market capital remains the same, but they increase the float in the number of shares. So it's called a dividend stripping or a bonus stripping law. So make sure that you don't do that. If it is, make sure you declare that. Obviously, you have a lot of keep buying and selling a lot of shares. Keep adding more rows so that you can fill in all that stuff. Then what are the industries you are buying and selling, make sure keep on going and filling all the ISIN code like I told you. Go to the NSE website. It will give you all those information. Then once this one is for NREs, if you are non-resident Indian and you when you buy and sell have capital gains, you need to declare it in this page. So what like also if you have say if you are Indian residents but you trade in foreign markets, there you need to make sure that you fill in all the important details for to declare the foreign assets. Either you own foreign bonds or foreign equity assets, you need to declare that. So once you come here, this is where when you need to tell if you have any income from other sources, dividends, or from a savings bank, from bank deposits, you need to declare that. So you, yeah, well, once you, because based on the deductions, if you have any interest coming out of from deposits, and if you are a senior citizen above 60 years of age, you can deduct 50,000 rupees per year. You can claim a dividend. So this is where you need to for short-term capital gains, if it's less than 1 year, if you buy and sell with less than 1 year, that's where you need to pay 15%. Certain assets that you buy and sell, it carries a lot for even for long-term capital gains. It's taxable at 20%. Some things are called collectibles. It's gold or Bitcoin. Those things are called collectibles. So they will charge you at extra more than equity, public equities. So the long-term capital gains on tax on gold is going to be 20%. So if you have any capital gain, capital loss, you can carry over. So this is where when you buy and sell a stock at a loss, you can claim it over here. So when you do all these calculations, you will this is the main unit where you need to. It's called a summary sheet, where enter your all your the capital gains income for your income from other sources such as from banks, from savings bank, from whatever that income you're getting from agriculture income, you need to pull it in. Once you put all the information, you go and hit the calculate tax. Obviously, it will take you to the verification. So that's why you need to fill it in. Again, a tax calculated source. Say if you are sending money out, the new law came in that a tax calculated source, they will RBI mandated that all the banks need to hold the tax calculated source at 5%. So that's why you claim it at the end of the year. Once you do all these things, you do the verification. It will come up and you can go and generate the XML, hit the generate XML. This utility will collect all the information and get everything ready for you to go and upload the XML. So once you go and log in, so this is where you can able to, once you log in, you will be able to load the XML. Okay. So if you need more information, I can do that every single step. In the next video, we will I will show you how I file it. Again, if you have any questions, leave it in the comment. Most important thing is I just want to convey more information regarding if you have capital gains from investing in stocks. How do you approach that? How do you declare all the numbers? How do you carry forward the loss? Okay, all right. Thank you.